Have you ever experienced this? Whenever you take a trade or you enter a market to go to a particular direction, what mostly happens is that it actually goes and hits your stop loss, right? And then it turns around to start going to that same direction at which you already initially predicted for the market to go based on your analysis. Now, this is something that most traders face when they are beginning to trade newly most of the time into the cryptocurrency or Forex market, whereby they will take a trade to say, let's say, go short. For instance, we're using this as an example. And then what happens is that the market actually goes ahead and hits the stop loss, then turns around and start going to the same direction at which it has already been predicted to go. This is not uncommon. This is very, very common, and it's very, very understandable. So what I want to do in this video is to show you exactly how to avoid these things. It's very easy to avoid it, and all you have to do is do what I'm about to share with you in this video. So before we go ahead and get started, go ahead and subscribe to the channel if you haven't done so already, and give the video a thumbs up, and kindly go ahead and give us a kind remark in the comment section as well. Tell us what you think about the content by the end of the video, and also tell us what the kind of content you would like to watch more in the next video, so we can also niche down on that and give you something that is really beneficial to you. Okay, so back to the case right here. So this is currently BTC USD, but it doesn't really matter any asset you want to use to trade. It's still the same for every single asset you want to trade out there, right? So the whole concept about this whole thing is that, let's say probably you've looked at the market, and then after verifying this market, because I actually used a high time frame to verify this, and I figured that the market is going to be going short, for a given time, which already it is obeying that rule. But there is something actually happened, being the fact that it went ahead and hit the stop loss, which is a point over here. And the reason why this happened is because this stop loss was poorly placed. Now, what do I mean by poorly placed? Now, I placed a stop loss right here, not because there is a particular reason or significant reason to place this stop loss right here. It's just because I felt like doing so, because I felt like I've given enough space to this point of resistance right here. So you already know that whenever it comes to trading, there's something called support and resistance. I normally don't like to use the inbuilt version of these tools, so I normally use things like horizontal lines to draw mine, right? So over here we have prices react most of the time. Sorry, let me get this again. Yeah, over here we have prices react most of the time. You call that what? A resistance. That's when the price is trying to resist or breaking through, right? Is breaking a barrier, going to the upward direction. And then when reverse is the case, when it's trying to resist a market from falling more, you call that what? A support line. So have a resistance line up here. So let me go ahead and change the color so you can be able to know what I'm saying. So the orange one is the resistance line, and the blue one is the support line. Okay, so basically what I'm trying to say is that I put stop loss over here by entering a trade over here with the intent that it's not gonna break this resistance, right? And then I put my stop loss over here with the intent that it's already been far enough from the resistance. But we all know that this is not how the market works, right? Because at least we the pro traders in the market already know this is not how the market works. Because the big guys in the market also know these things, right? They know that a lot of beginner traders are going to be doing this thing right here. So they're actually banking on you to go ahead and do this same exact mistake, right? So once you do this, they're going to pump the fund and liquidate your assets, right? So once they do that, the market will respect the natural behavior. These guys cannot leave their money long in market, which is why it cannot continue going up, right? They are in for business. They are just in for quick grab and run. They cannot put their money for long in the market because they cannot risk it like that. They trade quite a lot of money, so they can't actually risk that kind of money over a period of time that they are not certain of. They cannot control. So the best thing to do is actually liquidate the small traders, those guys with $50 accounts, $100 accounts, $100 accounts, $1,000 accounts. Just liquidate them as much as you can in such a short period of time, and then start moving to the actual natural direction of the market. That is the whole concept of this thing over here. So this is currently called a fake out. So if you already know what a fake out is, it is what it is, okay? So let me show you guys exactly what I would have done, or what you would have done to actually avoid being part of this, okay? So the very first thing I would like to tell you is, number one, don't be greedy. So if a person who is using, let's say, 100x to trade, 200x to trade, 50x to trade, 30x to trade, to me it's already too much, right? But I guess some people can do that, but it's up to you. Now, the ideal way to actually trade, right, to put your stop loss, is to make sure that your stop loss over here should be, let me show you something, okay? So if you look at the previous point of support right here, it was this line over here. This point over here, that was the previous point of support. So anything I'm gonna be doing right here, right? That was sorry, when I say previous point of support, I actually meant the previous point of support in respect to where the price was at the time the price was over here, right? Not this one, because obviously these ones too, yeah, supports as well, and they were actually earlier than this one. I meant where the price was over here. I can't be putting these guys into account when the market is already at the top over here. I don't know if you understand what I mean by that. Okay, so let's say the market is over here right now. Just forget whatever happened previously right here, okay? The market is over here right now, okay? And is over here right now, and you enter a trade right here, and you want to put your stop loss. Now, put your stop loss over here makes no sense, right? And why is that? Because the previous line of support, which is closely related to where this particular price is actually this point, this particular line over here. You can see this line over here, this price over here. The price actually related to this point. So whatever you should have done, your stop loss should have always been above this place. It could be by a little bit, but I like to give it a bit more of a nudge so you can actually be able to accommodate anything that might want to happen over there. So once this happens right here, okay, so if this market actually successfully breaks this, closes you out, now you are certain that there is a very high chance of a change in trend. That is, the market is already going upwards. It is no longer confirmed or speculated to continue going downwards. It is confirmed to start going upward because it has already changed its direction by breaking this guy right here. Okay, so that's actually the whole deal. Okay, now imagine if I actually did this, what would have happened? I would have closed out in profit. Okay, now let's say I did 2:1 risk to reward ratio using this particular point of support right here, which is the earlier version of the support, which is this ones right here. Okay, and I go ahead and put my take profits. This is somewhere here. This will be an easy 2:1 risk to reward ratio, and I still ended up closing in profit. I'm doing this to show you the power of this particular simple trading rule that most people don't understand. Don't just trade because of emotions. Emotions is gonna get you to lose a lot of your money in the market, and it's something you should never do or trade on. Now, this can also work well in Forex markets, right? Although currently right now the market is not live, so you might not really see whatever is happening, but it still doesn't matter. I can still show you exactly what I want to show you here. So clearly right here, you can see the market was actually on a downtrend over here. And what does a downtrend mean? It means lower highs, lower low. So if you look clearly, you're going to see that was what was happening right here. And then it got to a point, the market started shifting a little bit. We started having higher lows and boom, higher highs. But then, of course, if you've been following my channel, I don't normally trade when there is just a slight move to the change in direction. Okay, so we always wait for it to actually show us its clear intention. Okay, so this might mean not trading for an asset for a whole week. It might mean not trading an asset for a whole 2 weeks, but the wait is worth it, right? So you can see clearly right here that the market eventually shows a clear breakthrough that it has actually broken this place. Okay, now what do? We start waiting for the market to at least come back to the point where we would have entered the trade, which is this point over here. If you are looking at it over here, so over here is already certified as a support zone for the current market at this particular juncture, right? So the market did whatever it did what I did, and eventually came over here at some point over here. And now this is another crucial point, because this is where people are going to make mistakes again. Now you might ask me, okay, so what is the mistake that people are actually going to make right here? Now let me show you something. Okay, so this is what most people are going to do. They're simply going to go ahead and take out their trading tool, right? They're likely going to do this, right? And you might ask me, why this entirely? That's a very nice question. Okay, so if you look clearly, you're going to see that the market actually did some kind of huge movement right here. Okay, so once it hit this point, right, with a downward trend, it gives us a huge green candle and then closes at a very nice green candle. Now this is a very nice bullish engulfing pattern, and people are going to enter trades right here. Now remember what I told you guys. Remember, the big guys in the market, they are always watching, right? So for you to be safe, right, try not to use as much of liquidity or sorry, as much of when you're trading in the market. Let me explain it in a layman term, right? So when you're trading in the market, there's this thing that is called trading with 10x, 20x, 100x, 50x, especially when you're trading cryptocurrency. Okay, so what this basically means, and also maybe when you're trading forex, the lot sizes. Okay, so what these things are basically multipliers, right? So the reason for these things is to help you make a lot of money with just a small amount of money. But guess what? Those things also will make you lose quite a lot of money fast, right? So if what you have or what you're willing to risk on a particular trade is $100, and then you go ahead and take about 100x, which means 100 times 100, okay, that eventually becomes up to $10,000, right? What's the margin between your $100 to $10,000, right? Just a small amount of movement that the market is going to make to the opposite direction, it closes you out, which is what's going to force a lot of people to take their stop losses at a very short places. Okay, so for example, let's say they enter their trade over here, their stop loss is basically going to be somewhere around here, maybe just, let's say, slightly below it, just to give it a clearance. This is what's going to give them the assurance that they've actually entered a very nice trade. But guess what? Boom, they entered a loss trade and they lose this money, right? They lose their whole $100 just for chasing a dream right here. Okay, if you remember what I told you guys, the big guys are always watching, right? Look at, if as much as possible, try and use a bigger trading chart, okay, to look at your markets. And when you're trading, okay, try to avoid these closely related points where people are gonna easily say, okay, this is where I'm gonna put my stop loss, or this is a point of support and stuff like that. Try and look at something more significant. I mean, what about this? Okay, I don't know if you've thought about that. Okay, what about this? Something more significant. So if this truly comes over here and breaks this line, right, this simply means that the market has truly turned, and now you can easily start going for the other direction. Okay, so your risk to reward ratio is probably going to be somewhere here, which the market has not hit by now. But guess what? Using your trading stop loss and stuff like that, you might have actually still closed out. Now, for you to decide to say, okay, I want to close out somewhere here, and close out somewhere here or something like that. Maybe your market started trailing back, and then you got frightened and you decided to close over here. This is still 100% return on the amount of money you would have lost. So let's say you would have lost $100 over here, right? And then you closed over here, you would have gained extra $100 right here. Now, this is not a perfect trade, but this is a nice 1:1 risk to reward ratio. Okay, so at times the market is just not gonna give you that perfect setup you're looking for. So don't always wait for the perfect setup to appear. Just make sure you understand the concept of what I'm showing you. Okay, so let's try and switch it off to something else. I'm not really gonna waste time around, and let's go to something different entirely. Okay, so I've been trying to find a live setup, but I can't seem to find that right now. So let's just use something that already happened to just give you an example, right? So basically, let's say you're trading this right here, going this a nice downtrend, just a nice slight slope downtrend, and eventually changes to the upward direction. Okay, so obviously our main entrance position is gonna be somewhere around here. Okay, but eventually you can see that the market didn't actually touch here. But let's say somehow the market actually touched this point, and we entered this market. Our stop loss is not going to be something that is going to be closed somewhere here. Some markets are going to be a little bit more distorted than this one. This one is kind of very smooth, so it's not easy to show you exactly what is going on around here. But if you reduce this time frame, you'll be able to see that there's some market reactions over here. Okay, so our main point of stop loss on a market like this, right, is gonna be somewhere here, somewhere below here, and take profit is gonna be going all the way up there, right? So if you want to trade faster using this particular method, just reduce your time frame, right? You can reduce this to 15 minutes time frame, but just know that the more you reduce, the more movement happens quickly, and the more you make money, the more you lose money as well. Now, this strategy is not a foolproof strategy, but it's something that is guaranteed to actually at least keep you afloat and keep you making money instead of losing money in the trading market, be it crypto or forex market trading. It's just a simple thing. Doesn't require any special trading indicator or anything or alert or anything for you to actually do this. And with this, you can actually be able to make quite a lot of money from the market, and eventually you start mastering it. It becomes part of you, and at least you stop being greedy in the market. Actually, that's very, very important. Okay. I believe this is gonna be it for this content. Let me know what you think about it in the comment section, and if there's anything you want to add about this particular topic, go ahead and leave that in the comment section as well. And don't forget to give us a like and also subscribe to the channel and toggle on the bell notification icon to get notified every single time we drop in new content on this channel. It's Emmanuel right here. I want to say thank you for watching, and I'll see you in the next one.